our industry, which was, again, a finance industry at a time of a financial industry upheaval and with a lot of pressure self-generated and imposed, is going to get a lot of attention on these issues. And so there's always been, in the recent period of time, some controversy over business models. And business model is a kind of, for us, is a kind of predicate question to growth model. What's your growth? And so I'll just say for Goldman Sachs and the business mix that we're in, and people are in different business mixes, all the big firms around the world, some of which were, you could have put into buckets. Now everyone is almost a category of one. I could tell you how our strategy is different from all the other big institutions. I could tell you what they are and how they're different from each other. But I would say for us, the growth strategy for us, again, we're an institutional firm. We have no retail businesses. So we are always going to be more or less indexed to the growth of the markets in which we're operating. Our businesses are the institutional businesses of advising companies on mergers and acquisitions, financing those activities, managing money in risky assets, co-investing with our clients. So not only do we advise them and lend them money, but we partner with them and use our own capital as part of the equity to invest in businesses with them. And you could see that all of those businesses correlate the success with people's confidence. You don't buy other people's companies if you're not confident. You don't invest in risky assets unless you're confident. Confidence and growth. And so our strategy is to follow growth around the world and also contribute to that growth, support it. And so we are in, obviously, we're big in all the developed markets, but we also have, we're also investing in growing markets. South Africa is one. China is obviously the biggest of the growing markets, and we have a very big presence in China. We have some businesses in which we're already number one or big in the world. We try to grow those businesses, but how much growth are you going to get if you're already so big? And in those, you have two opportunities. You have the opportunity for when the world, as the world recovers and more growth occurs, we will do more M&A. It's not just a matter of taking over market share. It's markets to grow, but you don't just hold hands and wait for the, good things to happen. We're also going to do those activities in places where it's not done, and that's where the growth strategy comes in.
So what kind of deal flow are you seeing on the African continent?
On the African continent, we're seeing some, more than we have for some time, but I would say it's not, the developing markets recover more quickly. And there's more confidence. And by the way, it's all related. And because they recover more quickly, more people are confident, take more risk, and so they recover more quickly because there's more investment. Again, the opportunity set is always greater but riskier in the more in the developing market. So I'd say our level of activity takes something that's a little bit more remote, so it can be more clinical, but has some characteristics, obviously very different. Take China. China has not, in the spate of a few years in the 06, 07, 05, 07 period, China took its entire financial, all the big banks in China went public. A lot of reorganization, a lot of listings. And then in the crisis, really, activity slowed down, starting to pick up now. And you could see part of that is, if you follow these things as closely as I do, you could see there's a lot of stimulus being done in China, again, through the banking system, relaxation of some of the rules and regulations that constrained economic activity, and now it's started to rally up again. And so as the world sort of snaps out of, maybe snap is a little wishful thinking at my time, inches its way out of recession in some cases, you're seeing growth come back more quickly in the United States, now coming back in Europe, also aided by a stimulus program, and those things also bode well for emerging markets. But you could see that in South Africa, which had relatively, for an emerging market, positive growth, but relatively low growth, a little bit under 1.5% last year. We're projecting higher for this year. You'll see that our expectation is that will start to climb back, and the business that we're in benefits from that growth and contributes to that growth. In other words, things of growth and confidence comes in, people borrow more, issue more equity, invest in new activities, consolidate businesses, and we finance those things, and that very growth stimulates more confidence, and that becomes the virtuous cycle.